Today I'm speaking to Ben Whitmore, Fund Manager of the Jupiter UK Special Situations Fund. Ben is a contrarian investor who invests in UK listed value shares. So firstly, Ben, could you explain how you go against the crowd?
Well, Carl, thanks very much indeed. Well, when we go against the crowd, we're really just looking for things that are lowly valued and unpopular in the stock market, and we do that with a couple of screens. We screen for lowly valued shares using a Graham and Dodd screen, and that is lowly valued using average earnings, and we use a Greenblatt screen, which is the best combination of low valuation and high returns, and we run those once a month to drive our work.
And when you're running those screens, are there any key attributes or characteristics that you're looking for to help you find the potential winners and avoid those cheap shares that potentially have poorer recovery prospects?
So the screens are just a guide. They're, if you like, they're like a map, and they're saying, look in these areas. This is where you're more likely to find good opportunities. And the bit you're talking about, how do we separate what might be a good opportunity from what is not a good opportunity, is the analysis around the franchise, the balance sheet, the cash flows, and subjective measures around whether we think the profits can recover or not, or whether something has been permanently impaired in the business. So it's the screens guide us to the right areas, but from there we're looking on an individual company by company basis to find the ideas.
And where are you finding the best value opportunities at present? Are there any sectors or themes that you would highlight? And could you name a couple of stock examples?
So there's been very wide valuation dispersion in the market for the last few years. And by dispersion, I mean the most highly valued companies are worth multiples of the most lowly valued. And this has happened across all sectors, not just in one or two sectors. So we can find examples in almost every single sector where there are very lowly valued shares. That might range from EasyJet to BP to Glaxo, but in all of those cases, that they are very lowly valued.
Does one bank share in the top 10 holdings, Standard Chartered? Do you invest in the other four UK major banks? And if so, why are they not in the top 10?
So we have a spread of investments, and we do have investments in other banks. Standard Chartered is the one we favour the most at the moment, because for the first time in a very, very long time, the Asian-based banks are on discounts to the UK-based banks, and that's a variety of reasons around much harder lockdown around coronavirus, around worries about China, but that's what we see as the most attractive franchise at the moment.
And have you been making any changes to the portfolio in response to the high inflation levels and rising interest rates?
No, we're not macro investors, and so although the last few weeks has caused some uncertainty, we let the screens drive for opportunities. So if share prices are moving sharply, we'll pick them up that way and reassess them and look at each individual company. But we're not wanting to make macroeconomic forecasts or base our portfolio off macroeconomic decisions. We want to really concentrate on having a spread of lowly valued individual companies.
And what have been the newest holdings that have entered Jupiter UK Special Situations?
So I can't say that it's exactly the newest holding, but recently we've purchased a stake in ITV. That is the broadcasting business that we know. They also have a very big studio production business, making dramas and shows for broadcasters around the world and for the likes of Netflix. That business, people are very worried about that business because the ability to look at a whole variety of mediums at the moment, whether it's TikTok or YouTube, the worry is that ITV will no longer be able to command an audience. But so far, they've proven pretty adept at monetizing those audiences. They've actually just produced record revenues in their broadcasting business. And so, whilst there are fears, the valuation is very, very low. And we think that's an attractive risk reward.
Ben, thank you very much for your time today.
Thank you very much indeed.